Hello viewers, we'll be going over natural gas. In this video, we'll be going over my trade idea of the week and how I developed that idea. So let's start off with the technical analysis. We're currently down 1.2%, and on the 1 hour chart, we are approaching to negative MACD after being at overbought RSI on Friday and Sunday. As for the 4 hour chart, if we extend out further, we are resting along the 9 moving average, this blue line, and we may see signs of it diverging on the 4 hour MACD, and we're also quite near overbought RSI. If we extend out onto the daily chart, what we have here is we continue to make higher highs and higher lows, so the trend is still on the upside, and we are at near overbought RSI, and we see no signs of the 4 hour MACD diverging. So at the moment, we may see temporary long covers, so we may fall back to around possible support levels that dated back all the way to, say, August 7th. And since we're above resistance, that'll act as our immediate support. So that is around $2.25. And for resistance, if we do manage to reverse and head up higher, the next resistance will be where we made back today. That resistance is around $2.40. So for the trade idea of the week, I'll be trading UNG, and for my position size, it's going to be less than 1% of my portfolio. My entry for my long position is at $12.25, so slightly below where the 9-day moving average is, this blue line right here, and there's the entry level for my long position. And my sell target will be $13.85. And my stop loss will be $11.76. On the other hand, if I were to open a short position, my entry will be $14.39. That is slightly above the 200-day moving average, this green line, and previous resistance level that dated back all the way to April 7th, as well as April 21st, and also May 5th. So that will be my entry for my short position, and my sell target will be $12.79, and my stop loss for my short is $14.97. So how did I develop these trade ideas? The range, the bullish and bearish ratio come from the day-by-day probability model, which is available in the link below, so do check it out. As we progress to the 5th day or a week of trading, we have a 50% chance for UNG to fall between 0 to, say, 6%, negative 6%, and on the extreme case to the downside, a 50% chance for it to fall between negative 6% to negative 11.5%. So which one of these 4 models we should use as a reference? Let's examine the line graph right here. The blue lines are current trend, and the line overlapping it happens to be the best match. So right here we have our current trend, and the trend below is the one that we found on the line graph above. This trend dates back to December, or I should say July 20th to October 15, 2012. So let's begin comparing both of the trends. So right here we have the current trend. We have 1, 2, 3, 4 points. And on the trend in question, we also have 1, 2, 3, 4 points. So there's reason to believe if the trends and patterns are somewhat the same, the outcome and forecast should be fairly the same. So the model, again, that we just examined was July 20th to October 15, 2012. So we have 1 day out. That'll be a Tuesday, and 2 days out will be a Wednesday, and so on. So we have 3 days out, 4 days out, and 5 days out, or a week of trading. Back then, natural gas fell roughly around, let's say, 1% or 1.2%. So if we examine the day-by-day probability model, that coincides with this standard deviation of 50% chance for it to fall between 0 to negative 6%. If we examine closer on the technical performance of each trend, so we have the current trend right here, and the trend past that we just found and compared it to. So back then, it's somewhat similar from monthly high, somewhat similar from monthly low, and back then, it's somewhat different from 10 simple moving average, and somewhat different for the 20-day simple moving average, and somewhat different for the 50-day moving average. So there are technical differences among the 2 trends, so do keep that in mind. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.